Yup, what's good?
What's good? What's good? Welcome in, everybody.
So,
Hope everyone's having a great day so far. Uh, awesome. Can you guys see my face right now?
Yeah,
And you can see my
yeah,
screen.
yeah.
yeah.
Awesome. Welcome in, Billy Bob.
But
All right, today I low-key just wanted to start off the session with a nice little motivational video. So we'll go ahead and play this real quick. Just observe it and just look into it and feel something for it. So keep that.
I don't care how good you are. I don't care how talented you are. I don't care how much you work on yourself. There are some times when things aren't going to go right. There are times when anything that can happen will happen.
Life happens. The unexpected, the uncalled for, the unintentional. We've been damaged emotionally, damaged spiritually.
It may be your business. It may be your heart that is broken today. It may be the number in your bank account that is screaming, "You are broke."
You can break physically, you can break mentally, you can break your heart, you can break your spirit, and all of those are gonna leave a mark. But the mark that they leave can be the mark of victory or it can be the mark of defeat.
It is staying with the breaking that produces the blessing. It is not what you go through that determines where you end up. It's who you listen to. Because I think right now, you are walking through a valley between two voices. One is wisdom, one is worry. One is gratitude, one is grumbling. One is blame, one is faith.
Because every time you break, and in every way that you break, while it's a chance for you to give up and for you to fall apart, but there's also opportunity to get stronger and get smarter and get faster and get tougher and get more stable and get more resilient and get better.
What I need you to do is I need you to find a reason to keep going. And if you can find a reason to keep going, I know you're strong enough to do it because you're human. And every human has what it takes to get past whatever they're going through if they decide to. Push through it. Push through it. Tragedy and trials come to everybody. Only the strong survive.
The fight isn't over. The fight is just beginning. You have the opportunity to show the world what you are really made of.
I need you to look at that sickness that's going on in your life right now, whatever it is. I want you to say, I can beat it. I can beat it. I will beat it. I must. I got a family to live for. I ain't through yet. My life ain't over yet. There's some things in life you don't need no degree for. You don't need no money for it. You don't need no support for it. There's something in life you just gonna get through when you tell yourself, I'm gonna get through this.
Regardless of what happens to you in life, regardless of the adversity, regardless of the opposition, regardless of the trial and tribulation, nothing can stop you. The only thing that can stop you is you. No situation, no circumstance, no piece of adversity can define your life. Never let a circumstance define you.
And I'm not retreating. I'm not running. I don't care what they say on paper. I don't care if you say we outnumbered. We live by this and we die by this. We don't retreat. We don't run. We gonna stand, we gonna live, and we gonna die by what we stand for, and everybody gonna know what we represent and what we're part of.
I got staying power. I got staying power.
Be encouraged today that no matter what you walk through, no matter how broken your marriage is, no matter how many times you failed,
there is within you a spirit that is greater than whatever is going on around you.
If you would be willing to fight your way through this battle, fight your way through cancer, fight your way through that academic struggle, fight your way through divorce, fight your way through it. If you are willing to fight your way through that singing career, fight your way through boxing, fight your way through football, I'm telling you at the end of the fight is going to come victory.
And as you crawl up and out of that dismal and wretched place, as you rise above what you were, and as you take the form of who you are supposed to be, you will see that in the very act of standing up, in the very act of fighting on, you will become and you will remain unbroken.
Wow. That was nice. I like that. I might start every live session with a motivational video like that, just so get our spirits up. But I just wanted to show you guys that video because honestly, like I truly believe that. Hold on, my mic on? No, it is okay. I truly just wanted to I believe that like we're all destined for greatness. Like we're all capable of doing things that you see anyone on the internet doing, or we could do anything because we're all human. Um, when it came to trading, I'm not even gonna lie, there was times where I really wanted to quit. Like I lost so much money when I first started, and I doubted myself. I didn't think that this was for me. Like I knew the strategy was there, the potential was there, but it's just I wasn't performing it right and I wasn't executing properly. So when I first started trading, I actually lost about like $7,000. It's probably not a lot to some of you guys, probably a lot to some of you guys, but I lost, like, to me back then, I mean, even now, like $7,000 is a lot. So when I started off losing that much money and like in something that, I thought had a lot of potential, like it was heartbreaking. But it was just the thought of me knowing that this, you know, skill set that I'm learning, that I have learned, has so much potential that it could really like, build generational wealth for me. And it could actually like, give me the financial and time freedom I needed and I want. So like I grew a passion for it, kept going, grinded it out. I'm not even a year in yet, you know what I mean? And I'm still trying to like make this my full-time thing. But just know that if you're trying to learn something, like honestly, just go all out. You might not see success or results, right when you start. But I promise you, if that's really what you want to do in life, just go 110% at it. And I promise you success will come. Yeah, I like that. I really like that though. I'm really gonna start off my live sessions like that from now on. So today I wanted to talk about the pairs that I trade. So there you go. Let me delete this. All right. So I know Forex is a little it's a weird term, Forex, is short for foreign exchange. On this slide right here. Let me see. Right here, Forex, short for foreign exchange. So like what you think Forex is, it is actually what it is. It is what it says. It's foreign exchange. But believe it or not, a majority of the pairs that I like to trade aren't necessarily Forex. And I don't want you guys to be like actually confused about that. So with Forex, foreign exchange is like, trading between two different currencies, right? So if you go to major currency pairs, all of these pairs you see right here, like Euro, EUR, USD, US dollar, CAD, Canadian dollar, GBP, Great British Pound, all of these are 100%, authentic currency pairs. These are like the main foundation of Forex. This is what Forex is. This is the pairs that make up Forex. And I know whenever you guys see my live sessions, I'm always looking at things like gold. Gold, it's considered Forex because when it comes to like the apps you use or the apps I use for trading Forex, which is like MetaTrader 4 and TradingView. Basically, I need to learn how to stop saying bro. I realized in my last session I was saying that hella. So I'm gonna try to stop that. But yeah, so these are the main currencies that you would want to focus on. And then if you see when I trade in my live sessions, I mostly be trading like gold, and you see other pairs like this, right? US 30, which is Dow Jones, we got SPX, you know, and then you also see these ones right here, which is Bitcoin and Dogecoin. So some people don't know this, so I did want to bring it up in this live session. When it comes to Forex, so these right here are the main ones you should be looking at. These, like, there's obviously more, but these are my main actual Forex pairs, which is GBP, JPY, GBP, USD, and Euro USD. But when you see pairs like gold, this is actually considered a commodity. This is a metal. So that's the point I wanted to bring up. It's really cool with TradingView and MetaTrader 4 because not only are you, like, you think you're learning only Forex, but in reality you are learning how to trade stocks, you're learning how to trade indices, you're learning how to trade commodities, you're learning how to trade cryptocurrencies like Bitcoin and Dogecoin, right? Dude, if you're in Dogecoin right now, honestly, I wouldn't doubt if it's gonna like take off to the moon, to be honest. Like, that boy Elon Musk really something else for bringing this up. But you know, that is just all I wanted to bring up. You know, it's just really cool. Like, you could, like, there's a lot of people, you know, over the pandemic that wanted to learn, you know, a new source of income, which is working at home, which is the number one business. You know, number one at home business is just like trading. To be honest, it really is. And I noticed that a lot of people are using like Robinhood. You know, there's some other people that are like trading strictly cryptocurrencies, which like they're using Coinbase. But me personally, I really like using TradingView. I really like using MetaTrader 4 because it gives me the option to trade all of those, but at the same time, it's like easier to read for me. And that's you know, that's my goal in life. It's like I want to learn how to do this, master it, and teach all you guys how to do it so we could all learn it together and basically just, you know, stack our bread together. When it comes to trading Forex, this is the one thing I do recommend for people. You see my watch list, right? And there's all these pairs, but believe it or not, I don't actually trade all these pairs. Like, if I'm gonna be honest with you guys, when it comes to trading, like, I'd recommend looking at most two pairs at a time. So, you know, usually, like, honestly, out of all these pairs, I low-key only do trade like one pair. And my main pair is gold. This is like my money making pair. I love trading gold. Honestly, the strategy that I learned, which is the CV zone strategy, it was based off gold. It was like this strategy was made for gold, but at the same time, it's really cool because you can also use this strategy for other, you know, pairs and like indices and commodities, you know, etc., you know, cryptocurrency and all that. But I also like using gold because there's also this thing called the DXY, right? This isn't a pair to trade. This is just another pair to look at for confirmation, for confluence. So I like using DXY because I realize, it's not that I realize, like, because this is facts, like whatever basically happens on the DXY, the opposite is going to happen on gold. And that is because the DXY is like literally all it is what uh you know, the price of the US dollar currency, which is USD. So any pairs with USD in it, um if you were to look at the US dollar currency index, which is the DXY, whatever you see it doing, so for instance, you see it's going up right now, right? So the US dollar value is going up. So that means if you were to look at gold, you're trading gold against the US dollar. So if the US dollar is going up, that means, you know, gold's gonna go down. I just really like using it as confluence, and I like to use it as, you know, another like form of confirmation, because I like with the strategy already, there's already a lot of confirmation that you could look at, you know, like the back testing and looking back in history. That's like honestly good enough confirmations as it is. But you know, why not, you know, top the top the milkshake off with a little cherry. and just, look at the DXY, just get that extra confirmation, so you feel more safer to take that trade. And but yeah, going back to that topic of like trading multiple pairs, I would recommend only trading 1 to 2 pairs, because why look at many other pairs to try to trade off of and looking for like multiple setups when you can honestly just look at 1 or 2 pairs and just master those, and just strictly like focus your eyes on these pairs so you can master it and just know what they do all the time, every day, every second, every hour, you know what I mean? And once you master it, you could just, capitalize off the moves. You look for the moves, look for the setups. Once it happens, you know it's gonna happen. Well, why not do that rather than just like focusing and like getting your mind like all over the place looking at different pairs? Like, I don't know. I mean, some people are different. Like if you'd like to trade like that, I wouldn't bash on you for that. But for sure, if it's your first time trading, if you're barely getting into this, that's the best way to get started. Because when I first started, I was only looking at Forex pairs, because with Forex pairs, they're not as volatile as other pairs like gold and US 30. So what I mean by that is, like, if you're to go to a currency pair, right? Like for instance, EU is such a non-volatile pair, honestly. So honestly, like I see this setup happening right now, right? Boom, boom, right? That possibly could happen, right? And then let me go on the lower time frames. I kind of just want to see if there's imbalance right here. There's a little bit of imbalance right here. Just a little bit, not too much. I don't know if that's like nothing to worry about or something to worry about. I mean, who knows? So yeah, this honestly could happen on Euro USD right now, to be honest. It's crazy. It looks like it could be retesting right now, and maybe hit the sniper limit and then shoot up. But so far, like, it's performed the strategy pretty well. But going back from there, right? So if we were to do the strategy and you're to calculate your pips, right? Let's say you're to get a sniper limit entry, right? You go up, and that looks like a big move, right? This looks like a big move. Like every time you see this move happen on any other pair, like it looks like a big move, but in reality, it's only 52 pips, right? So like for me, I like looking, like if I were to have a trade like this, you know what I mean? I would expect at least 100 pips. You know what I mean? It doesn't really matter how many pips there are, because like you can make the same amount of money with whatever capital you have, but it just really depends on, like, your lot sizes. We could go more into the topic, later in the session, but I just want to show you guys this, like for instance, sniper limit entry to 50% line. It's only 50 pips, right, on a normal currency pair. But if you were to go to commodity pair, right, and if you were to, like, per se do the same shit right here, right, it's gonna do that, right, same thing, but just for a sell instead of a buy. If you were to calculate these pips from the sniper limit entry, it looks smaller, right? It actually looks smaller than what you saw in your USD, but this is actually 159 pips. So this is literally 3 times of what this is, right? And it looks way bigger, right? So this is only 50 pips, and this one right here is 159 pips, right? So that's what I want more people to understand when, like, looking at pairs and looking for the right pairs for them, so they could just learn and master them. If you're to trade pairs like gold, US 30, SPX 500, there's a couple more other indices and commodities out there, but these are my main ones. So I really like trading these because they offer a lot of pips every time I like want to take a trade. And the more pips it offers, the less of a lot size you would need to offer, you would need to put in, because it's already going to give you a lot of pips. But for instance, if you're to trade this for 50 pips, you need to put a higher lot size if you wanted to match the money you'd make getting like off a trade from gold. Not only that, but it really depends on your broker as well. My first original broker was an unregulated broker named Hugo's Way. Let me show you guys. I did want to go into brokers as well with you guys. So a regulated broker is those who are registered with the financial regulatory body of their own country and who must comply with the rules set by that body, right? So these are examples of brokers you can look out for. There's Awanda, Forex.com, IG, etc. Unregulated brokers they do not have to comply with any rules, but can behave in any matter they see fit. And Hugo's Way was obviously an unregulated broker. So the thing is, with unregulated brokers, like, if I'm gonna be so real, they have way more benefits, way more pros than regulated brokers do. And what I mean by way more benefits is, like, they offer higher leverages and they offer more pairs to trade, and like there's other things out there that unregulated brokers have that, you know, people wish regulated brokers have. But the one thing that scares people away from unregulated brokers is that they're not official. So basically, any broker you see out there or that you're interested in, it's best to find out if they're regulated or not. Because basically, if they're unregulated, they could close down their whole website and they could run off with their money, and you can't do anything about it. Like, if you're to like have Hugo's Way, you have thousands of dollars in your trading account, and out of nowhere, you know, since it's unregulated, you know, something happens and they just have to close down their whole website. Whatever money you have in there, like, that's not safe. You know, they could just run off with that, and you just, you know, you don't have the power to do anything about it. But with regulated brokers, you know, they're regulated, so, you know, they're official. You could trust them with your money, and, you know, basically, since they're regulated, that broker is bound to, like, you know, like, I wouldn't say never shut down, but, you know, as long as you know that you're safe, your money's safe with them, that's all that really matters. But another, I'd recommend, like, if you're looking into brokers, you should also, like, search it up. So for instance, Ingot Brokers, right? You could literally type, is Ingot Brokers regulated? Like, literally, that's all you got to type. Ingot Brokers is an authorized brokerage firm regulated, right, by the Australian Securities. So ASIC's a really good I don't even know what the word is, but they're a really good regulation service. And Hugo's Way, right? That was my first broker ever. This is the one that my mentor put me on. It was a really good broker, don't get me wrong. I really love this broker. The leverages and, like, the money I made with this broker was actually so good. But this is just what scared me away, to be honest. Straight up, Hugo's Way is not regulated. Forex brokers in the United States must be licensed and regulated by the CFTC. Otherwise, your cash is not protected. See, your cash is not protected. They can leave with your money, and you can't do anything about it. Hugo's Way is non-licensed or regulated broker. So don't get me wrong, it was a really good broker when I was using it. It's just, you know, I don't feel safe with my money here, like, straight up. So, you know, don't get me wrong, there's people that still use unregulated brokers regardless if it's safe or not, because like I'm saying, like, they do offer way more and it's low-key better. But I'd just prefer to have my money safe because it's just better long-term wise. So I also honestly, yeah, that's why I found Ingot Brokers, right? So I want to show you guys Ingot Brokers. So literally, if you were to actually, I'm not going to show you, but what's really cool about Ingot Brokers is that they literally offer in my eyes, in my opinion, they offer the same benefits and perks as unregulated brokers, except they're regulated, and that's what I really like about Ingot. So like when I was using Hugo's Way, I loved everything about it. I love the leverage, I love the spread, I love the money I was making overall with that broker. But once I found out I was unregulated, I was like, fuck. Now I need to find a broker just like Hugo's Way, but that's regulated. And honestly, the search was pretty hard. Like it took me a minute, and like I was looking at hella different brokers, and like I couldn't like find any for some reason. Like there's regulated brokers, like a majority of regulated brokers only have leverages like 1 to 50. And I lucky, I mean, it's like safer that way, but I'd prefer a higher leverage so I could make more money quicker. So I ended up stumbling upon Ingot Brokers, and this was the like overall the best match for me. Like it had everything that Hugo's Way offered, a little more actually. It had the pairs that I specifically wanted to trade, which was like gold and US 30 and all these other pairs and Bitcoin and all that. And at the same time, it was regulated. So now I felt safe. Who the hell is this? But yeah, and there were other regulated brokers I was looking that had like good leverage, but they didn't have the pairs I wanted to trade. Like they didn't have gold, they didn't have US 30, blah blah blah. They didn't have all that, or they would have this, but the leverage was shit. But literally, you could do your own research. Look for the right brokers for you. Just know that I did my research. I know that I could 100% trust Ingot Brokers. So if you would also like to start a live account with my broker, begin your trading journey with a trusted regulated broker. DM me for any details if you need any questions about how to start it, and how to get verified on it. Because you do, like, once you sign up for it, you do need to verify your identity and all that. I could help you with it. Just let me know. Click on this link and we can get it started. But the only reason I would freaking the only reason I would recommend Hugo's Way to you guys is only if you're gonna use it for a demo account like this. If you're gonna use a demos account, I would recommend using Hugo's Way. Like it's a good demo account to use, and since it's fake money, you don't need to worry about it being unregulated because it's only a demo account. It's fake money. But when you start using your live account, I do recommend Ingot Brokers, or you can find another one that suits you better. But that's just the one that works best for me.
I have a question.
What's up, brother?
Do you still use like a demo account, or I mean, since you're so far in your trading, do you mostly just use the live account?
So I'm not gonna lie. I always do use my live account. I only use my live account, but there'll be times where I blow my account and I gotta wait until my next paycheck or the next time I work to get like my tips to get money to fund my trading account. So like when I blow my trading account and I see another trading setup, that's when I'll use my demo. But overall, if you don't have money and you haven't had like too much experience trading, that's when I would recommend using your demo. Because for me, like there's no point in using my demo because I've already felt the emotion and psychology of trading with my live account, and I do have the money for it. So it's like I see no point in using my demo account when I could just go straight to my live. Unless I blow my account and I have nothing to trade with, then I'll go on my demo. Did that answer your question?
Yeah, it did.
Okay, for sure. What about you? Do you use your demo a lot, or do you even have a live account?
No, yeah, I don't have a live account yet. So yeah, I just use the demo.
Okay, but you're like understanding it really well and stuff, right? Like you're really getting used to it and all that.
Yeah, definitely.
Okay, for sure.
I'm probably gonna start a live account like pretty soon once I get out of school, or like for the summer.
Oh yeah, take your time with it, dude. Honestly, just keep it as a side little hustle until you want to make it full time. If it does happen.
Yeah.
Welcome to the meeting, Gus.
Yo, what's good? My bad. My bad. I was late, bro.
Are you good? You're good. Appreciate you for coming still. We basically just talked about like the pairs I trade, MetaTrader 4, how I low key like it better than like any other trading platforms. And TradingView is the best, honestly, the best like technical analysis website out there for traders, in my opinion. I talked about major currency pairs and like how for first time traders it would be better to stick to 1 to 2 pairs and just master that. you know Stuff that I already talked to you about, Gus. For first time traders, I'd recommend you know looking at less volatile pairs, because these are really volatile pairs, because like even if you were to put a small lot size, for some people, like it will actually be like it'll cost them a lot of money, if you were to go into drawdown. So like you could like end up over leveraging your account. You don't want that. You don't want to blow your account. You just want to be safe and just stack your money while building it. You know what I mean? But I do recommend only sticking into currency pairs. For me, on my watch list, I put I don't know why I labeled it these colors. I put like just yellow for gold. Um, I was gonna just put a yellow for commodities, purple for like extra confirmations. Red is indices, is my indice category. Green is my Forex category, and blue is my cryptocurrency category. I can't speak, bro. But I do recommend for first time traders only looking at currency pairs because they're less volatile. Once you learn how to trade less volatile pairs, then you can step it up a notch. Go to volatile pairs, which are like gold, US30, SPX, and then just going from there. Literally stick to 1 to 2 pairs at a time. Yeah, it can literally be at a time. Just like literally, if you want to just stick to these 2 pairs, master them, know how they move, and then go on to another 2 pairs, you could do that. But just don't have your mind all over the place, and don't be looking at too many pairs, because it could just get you off focus. That's basically what I'm trying to say. I did want to just look at what's going on in the market right now, and then later on we could go ahead and back test. But US30. So this is what's currently happening in the market right now, right? I seen this impulse move right here. This impulse move right here. Oh shit, hold on, give me a second. Seen this impulse move happen, boom, 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 right? It could be playing around here. Maybe this could be the little, maybe this is a little reversal pattern right here, and now it's gonna go up to retest, right? This is what I see currently happening. As you can see, remember last session we were talking about channels, so this is most likely the up channel, right? This is going to be the side channel, just anything that happens right here. And then when it does retest, this is going to be the down channel. If it does retest, right? That's what I see happening. Billy Bob, I don't think you were here. The session we were talking about live channels, or not live channels, but the session we were talking about channels and stuff. If you do want to look back at my first live session that I recorded, I did make a category to it. Subscribe to my YouTube channels, little channel category, and then I have the channel right here. So I'm gonna start posting all of my live session recordings on this specific channel in this category. So if you missed anything that I said, or if you wanted to watch this session but you couldn't make it, just know that I'm gonna post it. I'm gonna be posting it here and on my YouTube channel specifically. So make sure you subscribe, leave a like, comment, turn on that post notifications, all that good stuff. But yeah, let's go back to that. So this is what I see what's gonna happen right now, boom, 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 right? And I just want to go on my other pairs and show you that like this is how I trade. Like I look for any impulse move that recently just happened. I'll mark my fib. I'll put my fib down from high to low or low to high, whatever I see happens, right? I could even do it on the DXY. Let me see. Right? See? Maybe this could happen. Right? Sometimes I just like putting it there and then I'll look at the confirmations later. There's some good confirmations right here. They're pretty good confirmation right there. Confirmation. Confirmation. All right, so this is pretty cool, right? So it could be going down and then going up. See, if you were to look at DXY, right? If I think it's gonna go down, what do you think gold might do? It might go up. So this might be a CV zone breakout. I don't know. Just looking at these and like looking for all the confirmations, it does like kind of mix up my biases, but that's why you just got to be patient, see the right moves and see when it happens. And not only patience, you just got to look at it long term wise. Like the more you keep your eyes attached to these markets, the more you'll like actually learn what they like to do. And that's where I eventually end up wanting to be. Like I want to be to a point where like I don't even need to put these setups anymore unless I'm sending signals. I could just see it with my own like naked eye. And that's where I eventually want to be. I see this one. Oh, honestly, this could be a retest right here, to be honest. But I noticed that when it did this impulse move, it already went up to the freaking other CV zone. Usually that's where I would cut it and I would just like, say fuck it, delete this fib and just go move on to the next impulse move. But honestly, this it's looking like it might have potential. Who knows? I'm not gonna take that trade. It is in the CV zone for anyone that would want to take the trade. I mean, if you're watching this and like you have your demo account out, fuck it, you could try to put it and see what happens. Put a nice little buy right here where it is, nice little 1-to-2 ratio. Yeah, if you want, you know what I mean? Or you could do like a 1-to-5 ratio, 1-to-1.5 ratio. Yeah. I don't like taking trades that are like 1-to-2 low-key. I'd prefer if it was a 1-to-3 ratio, but if you're gonna trade light, this strategy is good for that. Like if you're to trade like a 1-to-1 strategy, but just go with really small lot size, that's okay. But look at that. That's just like you're risking as much as you want to earn. So it's like that's okay, but honestly, I would just like leave it like that. This does look like a gambler candle, right? So there's this, and then it looks like it could go up. So if anything, you could just put your stop loss right below that, have your TP there. This is like almost a 1-to-3 ratio. If it smacks your stop loss, oh well. But if it's TP, just know that was a good move because this is a reversal pattern in the CV zone, and it looks like a gambler candle. So like it could just go straight up. Who knows? But that's just how I would perceive that with my own eyes. I don't see too much here. I don't like this right here. I don't like this right here. See, like this one right here, it's a candle with no wick. See, it shows me like where should I put my, my freaking my 100% line, It's like if I see stuff like that, I'll just ignore it and just wait for a better impulse move. So like GBP JPY, as of right now, I'm just gonna ignore it. I seen this on GU, right? And at this point, I'm just waiting, right? I'm not taking any trades yet. I'm gonna wait until the 4. I'm waiting until the 4 to place my trades. See, I'm waiting for the 4 Bitcoin. So this one looks like it got potential. Oops. All right. See, again, waiting for the 4 to place my trades. Now I was just looking at Dogecoin because I low-key invested like a couple $100 in the Dogecoin on Robinhood. And then it's really cool because I could still use TradingView to see how it's moving while I'm using Robinhood. So that just shows another benefit with TradingView, bro. Because like you could use TradingView not only to trade for MetaTrader 4, but you could trade with all the other platforms while still making your analysis on TradingView. That's what's really cool about it, to be honest. But Oh, I realized I didn't show my fib retracement settings on my last live session, so I'm gonna leave this here for a couple seconds. Feel free to pause the video, add it to your own settings, change it to any color you like, and yeah, just make this your fib retracement if you want to trade the way I do. Make sure you add all these also. These matter. These all matter. All this. And hit OK. Right. Okay. Okay. So now, let's see. Let's go to a pair that was it GJ? Yeah, GJ. Okay, since there's no setups here, I want to backtest and look for a CV zone breakout. And let me go ahead and just explain what a CV zone breakout is to you guys. Okay. So these right here are the big moves, you know what I mean? So like both these ways of trading, you know, the way I said trading at the floor, right? Both of these are like really good effective trading strategies. I mean, they're the same strategy, like the CV zones, you know, it's the same, like, you know, basic same concept, but like one of these strategies offers more. It basically offers more pips and it offers a better risk to reward ratio. So like I said right here, this is nice, you know, trading at the floor, you get a good amount of pips, but like, you know, the stop loss is kind of like more riskier, right? But with CV zone breakouts, this is a different story, right? So you're waiting for that impulse move, but instead it does a fake out breakout. So you see it's performing the strategy. You think it's going to retest right here and go down, but you see it keeps going up. So once it breaks that 100% line, just know that if you had your confirmations on the CV zone already, that it's still going to be a CV zone. So when it breaks up past the 100% line, it's still going to use the CV zone, but instead it's going to use it as a support and then it's going to take off. So both ways, you're technically trading with the banks, you know, you're trading with the banks. So again, bank moves are like these big impulse moves that you see in the market. All these little candles, these are retail traders. These are us basically just, you know, investing a little bit of money that we have. But like these are the banks. These are the people that put freaking millions of dollars in just to like manipulate the market, you know? So I did want to address, you know, CV zone breakouts today. So they do happen often, but you know, these are the trades that I would, you know, I would look more into. Like if you're to trade like once a week, imagine winning a CV zone breakout over just a regular CV zone strategy trade. Like it'll definitely make your week better type shit. So let's go ahead and backtest, and let's go ahead and find a nice little CV zone breakout. Let's see, this is a good one. Nah, this might take a while, guys. My bad, but I promise you, it does happen often. I just need to look for it. Let's see. Okay, this is a good one. This is a great example, right? Actually, hold on. Okay, I would like to use this as an example, right? This is just an example. This isn't the way it looks all the time when it happens, but this is a good example, right? So, for instance, pretend this happened right here, right? You got the impulse move, you got the down channel. It's going up for consolidation. It's going to consolidate around this area right here, right? Around the 50% line to the 100% line. It's going to consolidate right here. And it until it comes back to fill this down channel, until there's an up channel to fill in this down channel, you know, we're looking at price playing around here until it shoots above this price range to, you know, fill in this down channel. And remember, there's most likely imbalance gaps within here. So it probably wants to fill those imbalance gaps, right? These hidden imbalance gaps. There probably is here, honestly. Let me just go and look at it. Let's see. Yeah, there's a couple small ones, not too big. This is a pretty big one right here, right? And that's extra confirmation that price would like to go up there. But it doesn't like to trade. It doesn't like to trade. It doesn't like to fill in imbalance gaps right away. It'll take its time, it'll like be days, weeks, months, even seconds. Sometimes it'll trade back in within seconds and minutes. But just know that if it's a really big imbalance gap, it's gonna trade. Like for instance, this one right here. This is a pretty big one. A couple minutes went by, right? A couple minutes went by. It hasn't traded back up here, and look what it did right here. It filled in the imbalance gap, right? There's still a little bit of space right here, but for the most part, all of this was filled right here. So going back from there, I just wanted to show you guys the CV zone breakout, because this is where I would prefer to get most of my trades, because it'll give me the most, like the biggest bag for the best possible risk to reward ratio. So let's continue from here, right? So this is what I'm looking at. Honestly, this wasn't a clean break in my eyes, because after it broke out, you see that there's a wick still touching the CV zone. So I don't consider it a clean break until all of price is outside the CV zone. This one, price went out, but it was still touching the CV zone. So it's technically still in the CV zone. And as of right here, it's still in the CV zone, right? So next thing you know, is a good thing that I saw that it wasn't a clean break and I didn't want to take the trade, because look what it did. It kept going down. And if I were to have gone in this trade, sniper limit or regular limit, I probably would have gotten stomped out, because price went down to try to take out all the buyers, right? And then this is where the CV zone breakout happens, right? So the CV zone breakout, you want to wait until price breaks the 100% line, or if it's flipped like this one. I mean, it's still the 100% line, but like, it really depends on like which way the market's going, the impulse move and all that. But you wait until price breaks out of it. It doesn't have to be a clean break. It just needs to wick outside the 100% line, or it has to have like, a little bit of body sticking out. And then next thing you know, it's going to come back down to retest the CV zone. So that's exactly what it did right here, right? It was a nice little fake out breakout. Broke out of the 100% line, came back up, retest, right? But it even went back to retest sniper limit entry. We're going to make this one our sniper limit entry, because it's going to go this way instead of that way. So it retested both the 88% line and the 78.6. And now look what it's going to do. Right? It's going to take its time. This is a couple hours. It gave you many opportunities to get in this trade. Many opportunities, right? Boom. Right. And this is going to be your TP right here. It's going to end up smashing it. Or I think that, yeah, right there. Ended up smashing. It smashed right here, but like sometimes with your broker and like MetaTrader 4, like the prices are a little mixed up and stuff. So like if you put a price and it doesn't stop you out, like it doesn't like take you out when it hits TP, it tends to do that. You know what I mean? So you just got to be vigilant on that. But this is a clean CV zone breakout, right? You got the impulse move. This was a kind of small wick, but like if I were to see it have a nice little retracement like that, I would still mark it up. I would still want to see what's up with this. Then I would look at my confirmations. Yeah, it's all there, yada yada, all that good stuff, right? The nice little fake out breakout, broke the 100% line. Now it comes back up to retest. So now that it's retested, it's gonna shoot back down. Boom. And I just really like this risk to reward better than the other one. Like I like trading both ways, but I like trading this way honestly more, because look at the risk to reward that you're dealing with. So for instance, for the long, right? This is the risk to reward you're dealing with if you're to go for a buy. Like don't pay attention to all of this, but So like if you want a 1-to-3 ratio, this is what you're looking for a 1-to-3 ratio. And honestly, that's a pretty small stop loss. I mean, like this is like a 75 pip stop loss, but at the same time, like it's small, bro. If you look at gold, like it could do this in like a second, bro. And even worse, like look at this. Like imagine if you were to take just a regular limit entry. Like imagine if you were to use the same stop loss. That's a 1-to-3, like one okay, yeah, 101.3. Like that's pretty bad, dude, honestly. And then like for these ones, I would mainly trade with a 1-to-2 ratio. But think about it like this: if you're to trade with these setups, you can't go crazy, bro. Like you can't be going crazy putting like standard lots and shit. Because if you're to put a standard lot and you only have this much stop loss, like bro, like you're gonna get stomped out and you're gonna lose a lot of money. So with these trades, I'd recommend going with these recommended lot sizes. If you have $100-$300 account, you only use these ones. It's really small. You're gonna see very little like profits, but I promise you, if you want to trade safe, like this is what I'd recommend. $500-$700 accounts literally only use 4 and 5 cent lot sizes. If you have $1,000 account, only do 10. And if you see the way I trade, you guys already know, bro. Like I be trading with lot sizes, and like at most, like I'll be having not really at most, but like on average, I'll be having like $1,000 accounts. So the fact that I'm trading like standard lot sizes, like I'm low key wilding. I'm sorry, Gus. What were you talking about? Would you recommend that to me, even though I already know your strat? You can unmute your mic if you want.
Yeah, for like when I do start when I do have an actual account, would you suggest me like considering that like lot size for your account thing right there?
Oh, these ones?
Yeah, like should
Hell
I
yes.
All right.
Yes, 100%. I wouldn't have made this slide if I didn't think it would be right for, people to see. You've been trading with your demo account, and I noticed you've been going crazy and stuff, right? And like, but the thing is, like, the psychology you have for your demo account, it's gonna be way different than if you're to be trading with a live account. Like, you'll be thinking differently, you'll be feeling differently. So honestly, like, if you do get really good at trading your demo and you just want to translate that into your live, you can do that. But just know that like it really your job is basically what's gonna dictate whether like how much like how you're gonna trade also, to be honest. Like if you have a good well-paying job and you have money coming in always, like you're not gonna be scared to lose money. So of course you're gonna use like bigger lot sizes so you could just like try to stack your bread more. But if you're getting paid like very little, like you're only trading with like allowance type shit and only getting $100-$200, like if you're to use big lot sizes, I promise you're gonna lose that money like in a snap of a finger, just like that. So I'd recommend sticking with these lot sizes, right? And just keep trying to build it up as you're working your job and getting paid. You could keep like stacking your account while trading with these lot sizes to learn and master it. And once you learn how to use these lot sizes for these accounts, you could end up just like upping your lot size just a little bit, not too much. Don't go from like a 10-cent lot size to a 50-cent lot size. You know what I mean? You don't want to do that. If you're trading 10 to 15-cent lot sizes, just try to up it up smaller. Like just go from a 15-cent to a nice little 16-cent. And then once you notice profits coming in and you're becoming more consistent, fuck it, try a 20-cent lot size. You know what I mean? And then just keep building it up from there, but just don't be impulsive and don't go straight from a 5-cent lot size to a standard lot. You know what I mean? You don't want to do that unless you got the funds and unless you got like the experience, the years of experience you've been trading in the markets. But yeah, for sure, if you ever want to go back to this little slide right here. Always always refer to this Discord server if you want to like look at this. If you ever forget, I will be posting this video also, so you could also watch this video. Yeah, but going on from there, CV zone breakout. So imagine if you were to trade with this, right? And the stop loss is so small. Yeah, your profits would look nice if it went up. But imagine if you were to lose this trade, and imagine if you were to use a standard lot. So this loss right here would be 75 pips, right? So imagine if you were to put a standard lot size, right? A standard lot size is $10 a pip. If I were to put a dollar lot size, $10 a pip, it would be 75. It would be 75 pips, right? So basically $10 times 75 would be 750. Just like that. Just like that, my friends. If I were to lose this trade with a dollar lot size, I lost $750 just like that. But if I were to win the $175 pips, if it were to go in my direction, right, it'd be the opposite. It'd be $10. Wait, I'm so sorry. I forgot. 175. Right? And then off this trade, I would have won 1750. Right? So it really depends on the lot size. So one, it depends on the broker you have. Two, it depends on your capital. And three, it just depends on who you are. You know what I mean? If you're about that risky life, then go crazy. But if you're about, if you're about being safe, being precautious, and just, if you're patient and you want to take your time with building your wealth, then for sure I'd recommend these recommended lot sizes. But just know that, look, imagine losing this trade with a dollar lot size. You're losing an instant like $750. And imagine if I were to have gone in this trade, like right here, literally, if I were to have done the strategy right here, put a dollar lot size, boom, smacked out literally within the next hour, bruh. Like I would have been smacked out with $750 out of my wallet just like that. Same thing with this one. If I were to have gone in this one with a dollar lot size, it'd be the same results. This one's 75 pips. This one's 75 pips. Yeah, literally the same thing. You would have lost it $750. But so if pretend I had a $1,000 account and I only put a 15-cent lot size, right? A 15-cent lot size would be $1.50 every pip. So $1.50 times the 75 pips. Actually, I'm gonna use my calculator. I don't feel like doing math right now. Boom. If you were to lose that trade, you'd only be losing 112.5. So imagine having an $1,000 account and then losing $750. That's like basically like, dude, that's like majority of your account, bro. Like you just lost all your account. You basically blew your account when you could have just lost $112. You know what I mean? This is what you would have won. This is what you okay, so this is the what you would have lost with a standard account. This is what you would have won with a standard account. This is what you would have lost with the recommended lot size for your $1,000 account. And if you're to lose it, or if you're to win it, just like that, bro. Look at it. Actually, I want to set this up. I want to make it look nice for the video. Yeah. This is a standard lot. Oh shit, what the fuck? What is happening? This is standard lot size, right? Standard lot size. This one right here. 0.15. And these are both with $1,000 accounts. Let's just say that. Let's just say that we have $1,000 account, you know. God, I fucking suck. Oh my god. All right. So yeah, this is $1,000 account. Let's just forget about this one. Let's just focus on this one. This is if we were to get in on a sniper limit entry. So if you're to get in, all right, hold on. So you multiply the lot size you put in by the amount of pips to see how much you would gain. Exactly. Yeah. You multiply that by so basically you gotta calculate. Right? So if you're to like look at the volume, this is what you put in your MetaTrader 4. Like this is the number that it shows on top. Just look at it like this. So if you're to put $1 lot size, look at the slide right next to it. This is $10 a pip. If you're to put 0.10, this is a dollar pip. But if since I said 0.15 last time, I only added 5 of the micro lots, which is 50 cents. So it's like basically $1.50. And then that's like the 15-cent lot size. And then you just go on TradingView, look at your tools. You could use a ruler tool, or you could basically use this thing right here. Oh my god, I am so dumb, bro. So the whole time, honestly, I was looking at this right here, but I think, dude, the pips were actually this one. I'm so dumb for that. Hold on. Dude, I gotta delete this whole live session now, bro. Jesus Christ. Let me see. Oh, okay, all right. So honestly, I got that all wrong. Pretend like you guys just didn't hear what I said just now. Just honestly, just leave the session, bro. Nah, I'm just playing. But basically, I got that wrong. I'm not gonna lie. I was looking at the amount for the lot size, but yeah, same calculations, but I just got the numbers wrong. I was supposed to be looking at this one right here. So this is the actual amount of pips. So like this is 62 pips, and then this is this right here is actually 20 pips. So fuck, dude, I am so dumb for that. Hold on. I promise I know what I'm talking about. I just fucked up right there. That was on me. I'm not gonna lie. Hold on. So remember when I said EU had very little pips? So this is like this right here is 52 pips. Oh, so I got that right the first time. What the hell? Okay, yeah, 52 pips. And then if you're to go to gold. Oh, what the heck? Am I tripping? No, I said this last time. I'm pretty sure I said this last time. God, I'm losing it, bro. Well, when I was talking about pips earlier, I think I said everything right. I'm pretty sure I did. But let's just go back to what I was talking about now. All right. What the hell? We're doing all this on SPX? Let's see. Oh God. Oh God, I fucked up, y'all. I forgot where my CV zone breakout was. Jesus. All right, hold on. I'm gonna find this again for y'all. I promise. Dude, I'm slipping. Okay. I am slipping for that one. No cap. All right. Don't mind me. I can't believe I just did that right now, bro. God. Jeez. What the fuck is this? Get out of here. right, it's bad. All right, I just gotta look for a new CV zone breakout now because I low key messed up right there. I'm not gonna lie, I lost my spot. God damn it, bro. Okay, I see another good CV zone breakout right here. I use this as my wick. I'm pretty sure you guys can see the CV zone breakout. Let me see. Oh, was it on GJ? Oh, it was on GJ, bro. You're smart, bro. You just saved my ass right there. All right. So, okay. So I was doing the right calculations, but I was just looking at the wrong lot size. Okay. So I was looking at the amount. Don't look at the amount. The pips are right here. It's these things right here. Right. So this is 60 to 20. Right. So, damn, bro. I really just fucking did that. All right. So let's say the stop loss, right, is 20. So instead of 75, you're basically doing the same thing, right? You're just doing 20. That, dude, that tripped me out so hard right there, dude. So the loss would be 200 and the win is $62. There you go. After I fix this, I'll go and explain to you guys what I'm looking at. I hope you guys are understanding this though, like what I'm speaking. Like I'm saying the right things. It's just like I just looked at the wrong number. That's it. All right, nice. So, right from this right here, from everything that you see right here, let's just say that this is happening in the market currently, and you see this happen, right? And you're like, all right, let me get in this sniper limit entry right quick, and let me just make this. Let me make it a 1-to-3 risk reward ratio. If you were to use a standard lot right here, right, as a limit, right, as a limit, if you're to take this L with all this drawdown, that 20 pips, you're gonna look at losing $200. And so 200 out of the $1,000 account. Dude, I'm so bad. I'm like good at math, but I'm like bad at the same time. I prefer to use my calculator. All right. But yeah, but if you're to lose 200 out of $1,000 account, that's already like 20% of your account, I believe. Let me see. Yeah, that's like 20% of your account. And basically the way traders normally trade, the way I was taught, I low-key don't trade like it right now. I feel like I'll learn it eventually over time. But the way that you're actually supposed to trade is you're only supposed to risk about 2 or 5% of your account every trade. So if you're to do like your own math, like you basically want to risk only 2 or 5% of my account. So if think of it like this: if I have $1,000 account, I only want to risk 2%. So right, I'm doing 1,000, right? 1,000 times 0.02. That's 2% of my account. I'm only looking to lose about $20 for this trade. So if I were to use a 15 lot size and lose 30, that's exactly what I want to aim for if I want to trade smart and strategically. But if I'm impulsive, I'm feeling risky, I want to make money, right? Because I have money coming in already. I want to go crazy. So I want to put the lot size. But just know that if I put the lot size and I take this L, I'm losing $200, which is already like 15% of what I shouldn't have lost. Like is like if I were to have traded smartly, you know what I mean? So just literally like all you got to do is just know your math. and know how pips and calculations work. And you could you literally have the capability of controlling your account, controlling how much money you make, controlling how much money you lose. You just got to know how to play it smart, play your cards right, and do it effectively, efficiently, and consistently. Yeah. But just know that if you were to have taken this trade, you surely would have lost. You would have lost straight up. You would have lost. You would have lost. You would have lost. You would have lost $200 with a lot size, or you would have lost $30 with a 15 lot size, right? Just want to show you guys that. It's crazy, right? It's crazy. But look at it like this. If you were to have been like, if you would have been patient, looked at this, been like, that's not a clean break. I don't want to get in this trade. See this happen, you would have been like, hell yeah, I'm glad I didn't take this trade because look where it went. But you realize it broke outside the 100% line. So it could be, you know, dun, 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 a CV zone breakout, which it was. Look what it did. It retested the normal buy limit entry. But for me personally, like, I'm to the point where like I'm making a good amount of money right now. So like I don't want to like force myself or like rush myself into bad trades. So like I'm gonna get in the best possible trades. So that's the best possible trades are always gonna be sniper limit entries, no matter what. That will get you the best, you know, possible position with the least possible risk, like the least possible risk, and you get the best risk to reward ratio. So I see a CV zone breakout happening for a sell. This is where I want to get in the trade, right? I want to get in this trade. Like if I'm feeling, if I want to get in a trade, but it's nowhere around this area, and I see it somewhere around here, this is probably the lowest I'll get. But if it's anywhere around here, that's like trading in the ocean, basically. I don't know if I explained trading in the. I'll probably explain it later, but I don't want you guys trading in the middle of the ocean. I'd rather have you trade, you know, and careful territories. But I personally wouldn't trade this one right here, even though the look, this is where the TP is, right? Look at that TP. Imagine getting this trade, bro. Imagine going crazy with this, bro. So like just like this, a 1-to-3 ratio would be right here. This is a 1-to-3 ratio, and that's honestly pretty good. But since it's right here, like you never know, it might even like it might come up to stop that out. But that's a good amount of like risk for how much you're trying to earn. But the sniper limit entry is even better because like look where it's at right now. Look where, if I were to match the stop losses, this is a 5 ratio. Like holy shit, like that's lit. But me personally, I like trading 1-to-3. So I'll move my stop loss up. You know what I mean? I'll move it up a little bit. This is a 1-to-3 ratio. Just like that. It's like almost at the 50% line. But if I know it's a CV zone breakout, it won't go anywhere higher. It'll just stay right here. No drawdown. Let's see what it does. Right? Only when it's a draw. Like if I were to get in the sniper limit entry, right? There's like no drawdown whatsoever. Keeps going down. Boom. TP smashed. Wait a little bit longer. TP smashed indefinitely. Like most definitely smashed TP right there. But these are the trades that I like taking because they offer the best risk to reward ratio with, you know, it basically just offers more, and you don't got to risk as much. So let's do the calculations for this. Let's say I have the $1,000 account again, right? $1,000 account. We're not going to trade this one. We're not going to trade that one. Just this one. $1,000 account, right? So stop loss right here, 46 pips. Try to make this as like easily visual as possible for you guys. Stop loss here. Stop loss 46 pips. TP. Let's see how much was that? I forgot. 138 pips. Guys, this will hopefully watching this video will like help you understand the pips, because I remember when we were talking earlier, this is one thing that you need a little more help on, correct? But going on from here, right? So okay, nice. Okay, so right here, our stop loss 46 pips, right? TP 138 pips. This is a nice 1-to-3 ratio off $1,000 account. So when it's happening like this, so I'd like it if the market, I'd like it if the market was right here, right? If it's right here and I see this happen, I'm just like, all right, hell yeah, this is probably a CV zone breakout. Other people would probably think otherwise, be like, oh, it's a new lower low. So let's just extend the Fibonacci and see what it does here. But me personally, if I already had my confirmations, I don't want to change my bias the first time. So I'll keep it like this, see a fake out breakout. And if I see this right here, then I'm just going to have a really good feeling it's a CV zone breakout. I'm going to do my little setup, see like my risk to reward, see how much money I can possibly make, can possibly lose. And then I'll just see from there. So if I know I have $1,000 account, and I'm about to get in this trade. So before I even place any sell, any market execution, any limit, any stops, I want to like look at all of this first, right? So if I know with $1,000 account, I could possibly lose 46 pips, and I can possibly gain 138 pips, and like it really depends on my mentality. So if I'm gonna be trading how I should be trading, only risking 2 to 5% at a time, I would look at it like this. I would look at my account size and I'd be like, all right, if I'm only gonna be risking, okay, I'll say 5% because I'm a little riskier, right? So I have $1,000 account. I only want to risk 5%. So I want to times that by 0.05. So $50. So with 46 pips as my stop loss, what lot size can I use that wouldn't go beyond losing $50 if I were to lose, right? So that's where I would just do my own little calculations, right? So I want to do this. So 46 pips, right? So if I were to use, okay, so I know for sure I wouldn't use a lot size, but let's just use the lot size as an example. $10 a pip right here for a lot size. Imagine doing 10 times 46, right? I don't know if you guys can see that. $460. So I'm looking to lose $50 if I were to trade only risking 5% of my account. So if I'm gonna lose $460, then I would be like, hell no. I'm not gonna use a lot size, or I'm not gonna use a standard lot. Let me see what's up with the mini lot size. $1 per pip. Like this is for a 10-cent lot size, right? And this one looks like it's gonna be perfect. So $1 per pip. So for 46 pips. No, what the fuck happened, bro? My bad. Anyways, so $1 pip. I'm looking at a 46. I'm looking at a 46 stop loss, 46 pip stop loss. So $1 pip, 1 times 46, 46, right? And if I'm only willing to lose $50 off this trade, then this is the one I want to go with. I want to go with the mini lot size. I want to go with a 10-cent lot size for this specific trade with $1,000 account. But the way I trade, I'm really risky, and I'm not gonna lie, I'm really impulsive. So I would probably fuck around and just put a lot size regardless, or like any other lot size I can put. So I would be risking $10 a pip. Like this is, oh my god, bro. So this is just the way I would trade low key. So if I were to do $10 a pip times 46, I would be losing $46 with a lot size. But if I were to win, 138 times 10. So yeah, I'll be losing $460, but if I were to have won this trade with a standard lot, I would win 1,380. I really hope this this session helps with you know, how to read, you know, pips, especially pips and lot sizes. I'll go to this side too, just so you guys can see, you know, pause the screen, take notes. These are what pips are. You know, these are examples of pips. You know, if you don't know how to read it through the ruler tool or the short and long position tools, you could easily learn how to read it through these side numbers right here. And this is what you're going to look for: pips, point percentage, for decimal place. JPY pairs are exceptional, right? So the Euro USD 1.1025 to 1.1035. You see how it moves the last two numbers up 10, so that's 10 pips. But JPY pairs only have two numbers after the decimal. They don't have four like another currency pairs. So it's just gonna use these two numbers. So it went up 20 pips from 0.20, 0.40, 0.05 to 0.95, and 1 minus 10 pips. All that good stuff. But yeah, just know that, yeah, if I were to use a standard lot on $1,000 account, just know that you can. But if you want to trade only risking 5% each trade, then honestly, that's honestly why I made this slide. Because with these account sizes and these lot sizes to go with the account sizes, this is as if you were only going to risk 2 to 5% each trade you do. But me, on the other hand, or for you guys, if you guys want to trade like me, if you want to just go crazy and try to make, you know, a big bag quick, just, you know, find the right lot size for you with whatever I taught you today, and just go crazy with it. Honestly, just make sure you take proper risk management. Look at your stop loss, look at your take profit, make sure everything fits perfectly before you take that trade. But just know that if you were not taking this trade, bro, you would have fucking 138 pips, bro. Crazy. Hold on, I think my thing died. But yeah, just like that, 138 pips, man. It took a couple hours to smash TP, but you know, hashtag TP smash that shit, bro. Imagine winning $1,380 off looking at a screen and just putting something in your phone and just winning $1,380. Like, that'd be sick. My biggest win was of course $20,000 in 4 hours. Like I found a move similar to this, but within 4 hours I smashed TP, and I believe I was using big ass lot size. I was using like 5 standard lots, so it kind of gives you a perspective of where you could be in the future, or you know how you would be trading, you know, if you were to like, you know, try to make big profits like that. But 20K in 4 hours, holy shit, bro. Like, I'm just waiting for that day to happen again. After that happened, that's for sure what showed me potential with Forex, and that's why I'm so passionate about it till this day. But yeah, if you guys have any questions, for sure let me know. I just love, I prefer overall trading CV zone breakouts, because just look at this. Like, if you're to look at this, like, you know, risk to reward ratio, it just looks so much cleaner than if you're to, like, so much cleaner and nicer than if you're to just do this. Like, legit, like come on now. Like, what the fuck is this? What the fuck? Wait, hold on. What the fuck is this compared to this? Like, this ain't shit, bro. It's like a little baby right here, bro. This is a little body. This is my fucking. This is a bank. This is a bank trade right here. Technically, nah, they're both bank trade. Like the way I was taught to trade, like this like strategy, they're both like made to teach you how to trade with the banks. It teaches you how to trade bank moves, but it's just I'd prefer to trade these. If I were to find a setup that has this one, I'll still take it. But just know that majority of the time, I'm gonna be looking for these trades because this is where I'm gonna make my biggest profits. Let's see what's happening on other pairs. Damn, this one looks like it could go up. I do still trade the regular CV zones, but just know that I have more. I wouldn't say I have more success trading CV zone breakouts. I just like I'd prefer to trade CV zone breakouts just because of the risk to reward and like the amount of pips I could gain. You know what I'm saying? You know what I'm saying? Yes, sir. Fuck, I kind of wanted to teach you guys something else. I hella forgot. Actually, we'll just go ahead and call it for today's session. I'll figure out what I want to talk about for next session, and I'll just go ahead and explain more on top of that. But for today, is there anything else I could answer for you guys? You guys got any more questions I can answer for you guys? Awesome. Well, I do appreciate you guys for coming to my live session today. Until next time, y'all.
All right, then I'm gonna get out of here. Yeah, thanks for doing the live session. See you later.
Man. Anytime. See you Wednesday.
Later.
Oh, actually, not Wednesday for you, huh, Swish?
Yeah, but yeah.
It's good. Next week, brother.
All right, later.
All right, then, Gus. All right, then, Billy Bob.
All right, later. Thank you.
Peace, y'all.
Peace.